Hey, Scott. Steve, what's happening, my man?
Hello, happy Monday.
And a happy Monday it is. And boy, it was quite the Monday. Of course, we'll get into that in just a moment. I want to take a moment here just to say welcome to another edition of the Office Hours webinar. I'm Jamie Hodge. I'll be your host. And of course, I've got my trusty co-pilot, Mr. Steve Gomez, riding shotgun as well. Half the month is behind us,
Uh-huh.
pretty much halfway through October, man. The time is just compressing, Steve.
Yes, it is.
All right, so welcome everybody. Before we get into the fun stuff, always have to take a moment to make the lawyers rest easy. And just want to make sure everybody is aware of the fact that the information that we share with you in this webinar, or whether it's any of the other 8 webinars that we host throughout the week, all this information is shared with you guys for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or some other licensed person like a Series 7 stockbroker, somebody that is set up and has the license to give you investment advice. So everything here, strictly for educational purposes only. Now, for you regular attendees, bear with us, you know the drill. For the people that might be in here for the very first time, we always like to take a moment here at the beginning to let you know about the environment or the infrastructure, so to speak, that we've built around the award-winning technology that is Trade Ideas. So it's community. And boy, what a community it is. It kind of starts up here in the upper left with the trading room, which is hosted by Mr. Barry Anderson. Opens the room up about 30 minutes before each open. Depending on the day, we might have 400, 500, 600 people in there, all active traders typically, sharing ideas and, you know, just uh, it's a great trading room. If you've shopped around trading rooms out there on the web, you know that there's a lot of them, some better than others, but typically there's always a price associated with those trading rooms. Well, the great thing about this one, other than Barry, is the price of 0.00. So it's free to not only Trade Idea subscribers, but you don't even necessarily have to be a subscriber to get in there and check it out, see what it's all about. So if you haven't been making use of that resource, do yourself a favor and get in there. Of course, today, myself, Steve, you get us on Mondays. Steve takes the driver's seat tomorrow for the trade of the week, always good. Andy is going to ride shotgun with Steve on Tuesdays, and then here we arrive at the hump day, Wednesday. I'd like to change it up a little bit, bring in the CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams. So always entertaining, nice change of pace. And then Andy wraps up the 5 p.m. Eastern webinars with the Trading Studio, and I typically ride shotgun with him. Come Friday, we like to switch it up, do something a little bit different. We have the ever popular Friday support session starting at 11 a.m. Eastern and going until 2 p.m. Eastern, assuming the crowd is active, which it typically is. We keep seeing more and more people pile into that thing. Also, too, a little sneak peek, as many of you know, it's getting pretty close to our Brokerage Plus module coming out of beta. It's been a long time, but we're getting ready to unleash some really cool features come the end of the year. And Brokerage Plus will be coming out of beta, so we will probably start allocating more than likely the last hour of the Friday support session to Brokerage Plus as more and more users sign up for the premium package and get grandfathered in to Brokerage Plus before we start making it available for actual sale. So keep that in mind. If you've been on the fence about premium, if you subscribe now, you're grandfathered in for Brokerage Plus. Once that product comes out of beta, there will be a charge for it. All right. Now, not only do we have the 5 o'clock webinars that we've just talked about here, but we used to offer one-on-one training sessions, myself, Steve, Andy, Sean. Well, we've just got so many clients that we cannot feasibly do that anymore. So we've replaced that with TI University. 4 webinars, Monday through Thursday, Beginner 101 Monday, 201 Tuesdays, 301 Wednesdays, and then all the way to Advanced 401 on Thursdays. So we do recommend that you take these things in order. That way you have the knowledge base you need to build 101 to 201, so forth and so on. So great things to attend. We've also got some recordings up on our Trade Ideas YouTube channel. So whether you attend them live or go watch the videos, a great deal of knowledge in these TI University webinars. All right, and one last slide here. Always like to show how our user base has responded to the introduction of the first AI module, which was the Holy Grail. She was the first one introduced in January 2016. Obviously resonating with the trading community. Our user count has went up dramatically. And by the way, you probably already know that we've released 2 additional AI modules. So now we have a trio. We've got the 3, Holy Grail, Holly 2.0, and Holly Neo. And as the end of the year comes to a close, and some of you may have already heard that one of the biggest feature requests that we have is the ability to automate Holly. Well, that is on the countdown. By the 1st of next year, that should be available. Of course, you're going to have a Brokerage Plus to be able to automate Holly strategies, which is why we don't have 1, we have 3, and by the end of the year, there might just be 5, okay? So keep that in mind moving forward. Brokerage Plus coming out of beta. You will need that if you have the desire to auto trade Holly strategies. Whether you auto trade them or just automate the process a little bit more by single clicking is up to you, but it will all be available. All right, on into today's agenda. Well, really interesting stuff to talk about, of course. Knowing what neighborhood we're in and knowing that the market charts don't look like they used to, Steve, do they?
No, they are broken.
Yes, and so, you know, a lot to be taken from today's lesson regarding, well, what do I do in a market situation like this? Well, you'll be surprised to know that a lot of the same things that work in the regular market, quote unquote, are working in today's market. We just have to be a lot more cautious, temper our expectations, and you know, not rush things. But before we get into that, I guess, Steve, if you're ready, I'll
Oh,
pass the
sure.
baton on over to you so you can show everybody the playground.
I'm glad you were talking a little slow there. I had about 7 sneezes in a row a couple minutes ago, so that was good
Wait,
timing.
the weather's trying to kill me
Yeah.
here in Texas. It all of a sudden you walked into your house, it was hot outside. You walked back out 15 minutes later, and it was literally like you were in an igloo. So yeah, my
Well,
allergies are.
yeah, it was good timing on your part for my allergies over here
All
with the
right.
dry winds kicking up. All right, guys, so there's definitely stuff to talk about on the market recap front. I think if we count back 5 candles, 1, 2, 3, 4, 5, it's that little green candle. So we discussed last week, you know, the orange line. I've got a lot more to say about these orange lines, so I'll tease that. The following day, we had a little doji with a big wick to the upside, and that was the day I was doing my webinar, and I said, wow, that was really not what we wanted to see on Monday. Remember, we were discussing we needed a bar reversal and then a green move higher, and we can start to call this a lower high, but we didn't get that. We got kind of a rejection wick at the end of the day, and actually a net loss for that day next to the green candle. Well, this was Wednesday. Market opened up and just started selling off and never looked back. And exactly like Jamie said, just a couple of broken days there, 2 in a row, giant volume. Look at that volume back there. So it was just breaking through all these firewalls, all these orange lines. And I started to notice some interesting things. Again, we're looking at the S&P 500, the spiders here. Sure, we broke through that first wall on Wednesday last week, which was prior resistance and support back here. I talk a lot about these orange lines being lines of pivot, prior resistance, future support, prior resistance, back and forth. Pivot lines tend to show themselves up when you kind of look to the left in the history. Look back here on this one, we had some major resistance back here and some resistance congestion, and then pull back and bounced off that line 1, 2, 3 times actually. We broke through that as well on one day. So it's just a horrible, horrible breakdown technically that day and closing below it and follow through the following day. I'll zoom in now. A couple of things to note. We've lost our 200-day moving average, which was the last of the moving averages that supports a decent trend line. And we've had 3 closes below it, including today. And then here we are on these orange lines again, and I'm going to shift to an intraday chart, my 15-minute candles, and know that these orange lines basically transpose over to the 15-minute chart. We can expand this a little bit, and we start to see some funny things. Now remember, guys, these lines were drawn a long time ago. I've had these lines in here for a very long time, and yet in the last 3 or 4 days, they're still very significant. All right, so there's the 15-minute riding that line on that particular day, and then we broke down through it, broke through that line like butter at the close, bounced up to just under that line the following day, and then fell down to this support line, which was on the daily chart, and it wound up working its way into the intraday chart. Following same day, we broke through that and then down, we tested the lower one that I have on my daily chart, which is this guy right here, that bottom orange line. So those are transposing here all into one frame, essentially. All this work in one 15-minute candle frame. But again, if we follow along, we bounced off the lower one, kind of sloppy through that one, a little bit of congestion on Friday, and then broke through it, and then it came back and became resistance, was resistance for most of the afternoon, then Friday afternoon broke through it. Come here to Monday today, we break down to it, and then it becomes support again. So even in the intraday scope, it's fractal in the way the price action is behaving there. These lines are significant on the daily, but they're also very significant on days like now when we have this incredible volatility. You can start to see how those lines have transposed into today's action. So that's one of the things I'm noticing most of all. People may have noticed there is no trade of the week this week. These are the kind of weeks we like to step back and just call for cash and wait for things to sort themselves out, because the volatility of the moves are so great. I mean, if you're a real diehard and you're an addict and you have to go at it and push buttons every day, well, I would say if you're normally trading like 500 shares of something, you should probably be trading 200 shares. Really pull back on the share size, because the volatilities, they're banging off 1% moves intraday like it's nothing. So if you have to do it, that's one of the ways you can try and adjust. But in terms of trying to call a trade of the week for a position trade and a swing trade, it's just too noisy out there. So there's that. Looking at the NASDAQ, same kind of thing going on over there. All of these lines became very significant. This middle line was hashed back here as support, and then future support again. Well, it's the line that Friday bounced right on into. Here it is transposed in the NASDAQ and in the Qs. So once again, the historical pivot lines continue to move forward to infinity for as long as we're in these trading ranges, and they start to show themselves. Pretty good resistance at the close on Friday on that one, pretty good support last Thursday on the lower one there in the NASDAQ. Now, the one thing the NASDAQ has that the spiders, SPY, does not have is the NASDAQ still regained and closed above its 200-day moving average. So that's one score for the pro side, the positive side, but still a very broken market. And I'll use this one to illustrate what's going to probably happen to the spiders and the NASDAQ. What we notice up top, what's bringing up the rear from behind? Well, a horrible set of collapsed moving averages, 10 crossing over the 20, 20 crossing over the 50, and so on. So now any type of price bounce is going to have tremendous headwinds. This 10-period moving average that's sloping down to meet the price in the next day or two is going to be a tremendous headwind, I guarantee you. So the next big test is if we do hold these levels and try and bounce and recover from the damage that happened last week, these declining moving averages will definitely be a headwind, to say the least. And I'll just go back to the spiders. That's what the spiders are going to look like. The price is already rolling back over in the S&P 500 below the 200-day. These moving averages are crossing over, and they're going to have something to say about it. Let's go over to the Dow. Dow is also above its 200-day, very much like the NASDAQ is, but same thing. There's no bounce here with the net negative change today over here in the Dow from Friday. No follow through on that long tail wick over there. The price is just seeming to be anemic and kind of rolling back over. Once again, these moving averages are going to curl over and catch up. They're going to be a tremendous headwind for the Dow. And then lastly, the IWM broke its 200-day, and look, it held up for 3 days back here. And the moving averages are much more seasoned to the downside than the other ones we just looked at, which are about to look like this in a few days. And so the IWM has led us lower without a doubt. But this 10-period moving average, as you can see, the price has not wanted to get anywhere near that 10 period, closed below the 200-day, and we're just kind of not much bounce down here. It's just kind of sit and consolidate down here. Oh, and lastly, before I turn it back over to Jamie, one last example of, a great pivot line. Look at back here, the support that was showing up in the IWM. That's pretty much where the IWM bounced on Friday, the Russell 2000 and all the small caps. So, that's what I'm seeing going on in all four indices. There's really no point in trying to be a hero here. Markets can remain oversold longer than impatient traders can remain solvent. So just because something's oversold doesn't mean it's ready for a bounce. Things can stay in the basement for a while in terms of those overbought, oversold oscillators. And IWM is kind of showing us that. It's just a lackadaisical attempt to bounce in price, if at all. Same with the Dow and same with the S&P. They're just kind of rolling back over. I mean, the Qs put up the biggest fight today, but even they closed negative. So a lot going on. You can downsize in your share size to adjust for the volatility out there. And that's what I was noticing today, are these pivot points definitely staying in place. And the winds might have changed here. We'll see. Probably need another week or two to figure out if the buy the dip is completely gone. But we'll see. These moving averages that are curling over are definitely going to have something to say about it. All right, well, that's all I got. Jamie?
Good stuff. Yeah, seeing the SPY below that 200-day. Got a lot of people sweating, I guess, if you're a hedge fund manager or long-term holder.
No attempt to bounce at all. Yeah.
Yes. Okay, you should have eyes back on mine.
I do.
All right. And there was a user popping a question in there about our charts and the ability to mark them up real quick. So I'll just address that real quick. If you just right-click in our charts, you'll have the ability to mark up. Very basic right now. We're working on new studies to add. Of course, we can add indicators, but they're going to be limited to what you see right here for now. So just a quick blurb on the charts there. All right, so back to the agenda here. All right, ladies and gentlemen, it's all about expectations and, knowing what neighborhood you're in and, seeing what's transpired here on the charts. Everybody's got to have decent expectations. In other words, if the market is us going snow skiing, well, these days following these big, it goes the same way with the run-ups too, but even more calamity on the downside because, as Steve always likes to point out, we go up on a staircase, but boy, when it's time to go down, none of this nice smooth action to the downside. It's whoosh, whoosh, happens very quickly. So these digestive days where the market's trying to figure out where it's going to go are, they're double black diamonds as well. So always keep that in mind as you navigate days like these. So what about expectations today? Well, coming into the session, we had to have, some type of safety mechanism in the back of our minds going, okay, well, there's a lot of things that could happen today. What's my best route? Well, we got that one expectation coming into the session that it's going to be a double black diamond ski slope. So we better not go too fast or we could end up flying off a cliff or eating some big fat moguls face first. So we want to make sure that we're nice and calm on a day like today and not just jumping in there headlong. Now, for those of you who attend on the regulars, you know what I like to look for to help me temper my expectations, and that is, get off there, that is my compare count window, looking at the large cap stocks in the first 15 minutes and then attempting to make sense of it. Well, here they are after the first 15 today. And boy, when I saw this, because hey, 49.51 would have been kind of a, well, anything goes day. But no, I mean, it pegged 50-50 to the T. And, this doesn't happen very often. So especially coming into today's session, knowing what's transpired over the past trading week, and then after the first 15 minutes today, we get 50-50. I mean, anything goes, and guess what? It did. Just looking at the SPY today, I've got it crunched up a little bit here, looking at the 5-minute candles, but 15s aren't going to look that different. I mean, look at the seesaw action that we had all day. Let's go to lows. Let's go back to almost highs, or yes, new highs, almost back down to new lows. So I mean, something happening every so many digestive, every so what, 5, 10, 15, 30, every hour or so, we're climbing back up, we're going back down. So hey, longs could make money today and shorts could make money today, but it wasn't easy to predict that movement. But when we see a 50-50 compare count in addition to what we have right here, that just means, hey, I got to be super selective. The Hollies were very active today, and boy, when we take a look at the risk on fluctuations in Holly Neo today, which is the more aggressive of the trio, I mean, that tells it all right there. This 50-50 anything goes was perfectly illustrated when we take a look over here at Neo's P&L graph today. I mean, check out what we have here. Little flat start, whoosh, up over $1, all the way back down, negative, and then a little try back up to flat, and then at its depths, down a little over $1 before, oops, I'm looking at the wrong one today. There, okay, that's the one I was trying to see. So risk on, risk off, nothing crazy, right? On the trade count, finished up 65 cents, obeying all the rules, but risk on, just staying in everything and letting things do their thing, so to speak. I mean, look at these fluctuations. I mean, this perfectly mirrors or perfectly fits with the expectations that this little guy told me today, all right? Anything goes. And this, I kept thinking that there were problems with the software today because I've never seen fluctuations this large on any of the modules where it's up 2 points, it's down 2 points, or close to 2 points. Oh, it's back up, it's down, it's back up again, it's back down, and then
Sorry,
it's up the
Jamie.
most. Yes.
This happened to me before. You don't realize it because you have black, blank back screen, but you've got your window, your today's class is covering your charts.
Sorry about that, Steve. I was
And
getting a little
thank you.
excited looking. I was getting
Yeah,
a little excited looking at the P&L
and
graph
thank
here
you,
in the chart.
Stephen, for pointing that out there in the question and answer. Thank you. All right, as you were.
Hey, it was just right in front of my face, right? But in any case, some of the wildest fluctuations I've ever seen in any of the AI modules. Of course, it's fitting that it is Neo because it's the more aggressive of the two. Having said that, now I'll pull my sheet back over and let's talk about some of the trade arounds and risk on opportunities that still were present today based on the same things that we always look at, right? Let me make sure I'm on the right blotter here as well. Okay, so here we have Neo finishing the day down 5.55 points. So a lot of the risk on that was here is not there anymore, right? Everything got soft at the end of the day, coinciding with the sell-off here. So in this case, I'd like to point out max profit. This is a good day to talk about max profit because the max profit column shows us how much the stock was up at one point in risk off mode. All right, so this is a better way to kind of look at those opportunities because once again, usually on an uptrending day, we see the risk on and the spread remain at the close, but not today, just due to the market action that we had at the close. So let's do it this way today. Now, UBNT, let's see here. She pegged that one pretty good. Pegged that one pretty good. $1.13, just missed the top, which was right up here. Let's put a little line right there. You can see the shaded area right here representing when Holly pulls the plug. So at the top, though, we can see $1.67. All right. So this was after the fact here. So this might not be the best method to look at risk on today, but we're seeing things that we don't normally see. Right now, risk on, not a lot to be had in Neo. So let's do this. This might be a good way to find some risk or some trade arounds today. Let's take a look here, boot. Oh yeah, let me backtrack a little bit here, all right? Because this is kind of important. We've been talking about this from time to time. When you see a day like today, not only market conditions, but then again, a pegged 50-50 compare count on the large cap stocks after the first 15 minutes, then you should automatically go, okay, not only do I have to really focus on quality, but today might be one of those days where we see massive fluctuations in the P&L. So how should I treat these signals? Well, today would have been very good, and I don't think these types of days are over yet. It's going to get interesting. But for example, when this boot trade came out today, thinking to myself, well, I don't really know. Buying it right here might be good, it might not, but based on the conditions and what I'm seeing from my other metrics, maybe today is one of the days to just wait and see pullbacks, wait and see stop losses. All right. Now we can see here, this one did. It came right on down, stopped out, got below there, but then comes back up through the stop level. So we've talked about this off and on throughout the previous webinars. Today was probably one of the best examples to adhere to this type of signal gathering, for lack of a better term. So when it's weak and we think that the underlying metrics are weak, seeing a 50-50 on that compare count, a lot of the times we wait an hour, we wait 30 minutes until something really grabs us. So when we get into my bread and butter windows today, hey, that pattern's there. There were some nice tight patterns today to the upside. All you have to do is be patient and wait for them. So on a day like today, and it might be like this tomorrow or the next day, who knows? If you're not certain, just give it some time, because on a day like today, they have the propensity to pull back. Maybe they hit the stop loss, maybe they don't. But on days like today, if you were pivoting around these stop areas, it almost forms like this little tight range between the entry signal and the stop. So just keep that in mind on days where, even if it's not a 50-50 on your compare count windows or whatever it is you like to try to gauge your expectations, anything below 55%, these types of days are possible as well, where there's a little weakness. And, while all of these plays, the statistical probability is good for the day, the timing was not very on today, simply because of market conditions and a lot of selling and then kicking into a lot of buying. So let's see here. Boot was one good example. I'm just not seeing a whole lot of good examples in this ending data here on NEO today, which, the fluctuations were crazy and huge. But on the max profit column, very interesting still on this number of signals. What you have today, 22 signals total, and at one point was up $4 or $5. So there was plenty of opportunity. We just had to be very nimble, or it would go away. That's another common theme when we're in an uncertain market is, you know what, there's going to be good longs and good shorts, but it's probably one of those scalping days, because if you try to hold on to it, it's just going to roll back over, flat you out, or even lose money on the trade. So still an impressive trade count, and the fact that, let's see, 1, 2, 3, 3 positions never made it into the money on a 22 trade count plotter here, which, hey, don't know a lot of humans that can put on, even if we get rid of the zero outs here and just call them losers, where you pile into 19 other trades and you are in a position to take money off the table at some point by varying degrees. Still not an easy task to accomplish in any market. Let me just sort one more time here, see if I'm missing anything here, but there's just not really a whole lot to go over. There's no spread here between risk off and risk on. Let's switch over. Okay, so I just got the little message over here, Steve, that my audio connection was wavering. Am I still sounding okay?
You. I hear you.
All right. So now let's flip on over to 2.0. And what are we going to see? We're going to see more of the same here. There is no risk on, risk off spread here. Now, all this, and then we see something like this. Holy Grail, who we've been kind of, laughing about here lately when NEO goes on her tears and, Holly 2.0 goes on its tears. We've been, kind of going, well, conservative old Holy Grail, the old gray mare in the stall.
What she used to be.
Yeah, and then you get something completely out of the blue. And this time it came in the form of a 66-cent stock, which was apparently extremely liquid today, because when we look at the metrics here in my single stock window, little guy finished with a relative volume of 22, right? And these 1 minute and 5 minute volume levels were raging all day and nice and liquid. How liquid is FLKS typically? Well, it's down, it was, on its death march. But boy, something's going on with the company right here. Holy Grail, which, I mean, when I saw this one come across, I was like, okay, is Mighty Mouse in there, or what's the other small one, Steve? I forget. I thought it was one of the
Little big
small,
guy.
yeah, Little Big Guy or Mighty Mouse, but no, it was not. Strong stock pulling back. FLKS. I'm like blinking 2 times, going, is that $66 or six? Nope, 66 cents. And there's so much beauty going on in this chart right here. Whether you're looking at 5 or 15, it's not going to really matter. But I mean, what a timely entry signal here. I could draw a line, but I would just cover up Holly's line. Why do I like this chart so much? A couple of things. Number one, it's coming from one of the Hollies. Strong stock pulling back, letting us have, or letting us enjoy. Where is my, am I on the right one? No, that's fine. You can't see it, Jamie. Okay. Strong stock pulling back here. 61% coming to the party. This little guy kicked out 5 trades today, won 4 out of 5 in risk off, performed at 80% today. Strong stock pulling back, 61% chance, and then, ooh, exactly, this is my dream pattern right here. This is what I look for. We're going to cover some more of these patterns a little bit later in the session, but, seeing it just occur, not in that actual break candle right there, but man, close enough. I mean, you don't have to be a chart expert to recognize what your risk level is there if you were trading this pattern manually. But more importantly, Holly's already got that stop predefined for you right there. And then we can just see, boom, a nice little move here, and then consolidation. Plenty of other opportunities throughout the day to add to this position as well. After this this break here occurs, we march higher on the top tier. It tightens up again and then goes again in the last hour of the day or so. Let's see, 5, 10, 15, 20, 35, 40 minutes there, I think. But 43%. I mean, when's the last time you saw a 43%er coming out of Holly? I mean, I think it's happened before, but it's been a while. And, none of this real crazy wicked out chart. This was some very nice, smooth action. Behave just like you want a stock to behave in this FLKS today, not only with this great entry from Holly right off the bat, but once you, get familiar with reading these chart patterns, and you see these things repeat over and over again, excellent opportunity to bolster the position or trade it for a second or even a third pop today. So I hope some of you guys were in that one today. I know a lot of people were. So, once again, out of chaos comes a little jewel like this one today. And Holly, the old gray mare, Holly Grail, was really the best performer today. And I think we might even have a little risk on action here. Holly does not disappoint. So let's take a look at the risk on opportunity in Power Hour Short here, which I was glad to see Power Hour throw out at least one there. Once again, Power Hour Short came into the session 64.5%. A nice little topping entry right here, right outside that, after it wicked back down. So Holly, in her risk off mode, she went the whole distance, which I think these are 30-minute hold times here. Yep, nice and short since it's in the last hour there. And Holly getting out about right here, as we can see from the shaded area as well. That's Holly getting out, corresponding with the shaded area right here. So we could have taken some risk on opportunity on this one and been rewarded. We get the nice move down. We get a little consolidation here. That's not necessarily a bad thing. This means buyers and sellers have reached parity for a moment of time. And these are some of the best ones to practice up on going risk on, because, they're just meandering along, not doing anything too crazy. So a lot of people get confused when they first get exposed to Holly and start watching the modules. They're like, well, what do I pick? Do I pick one right at the beginning of the session and say, okay, risk on everything, risk off everything? I can see how somebody would get confused like that, but it's really about a trade by trade basis. If you like what's happening on the chart and you see Holly getting out because she's programmed to on a timed exit, if you think that there's more meat left on the bone here, you can say, well, Holly, I acknowledge you getting out. Thank you for telling me. I'm going to stay in because I think there might be a little bit more meat left on the proverbial bone here. And in this case, there was. Okay, nice little spread between, let's see, 43, about 45 cents left on the table between 28 cents and 73. Of course, you don't have to get it all, and you won't get it all. Every once in a while you will, but sometimes we sell the top, sometimes we buy the bottom, but it's the exception and not the norm. So even if you're able to get another 10 cents, 15 cents out of this trade, 20 cents or more, then you're doing the right thing there. It's about capturing some of the spread and every once in a while, the majority of it. So nice risk on there, nice risk on opportunity, I should say, in ESPR towards the end of the day. Now, here is a long one, of course. Holly. But why did she get out? Well, because she was programmed to. Strong stock pulling back. Once again, shorter time frame here, 45 minutes. So same thing with this shaded area right here. Now, this is just the epitome of a risk on trade. See Holly getting out right here. It's just making the flat line. You could almost level something on this little base that it's building up here. But nothing is ever easy because you have to make a decision. If you're going to stay on and try to get more via risk on, you have to either A, stick with your stop loss, your original one, or readjust the lot for the risk on portion. So if we took, and a great way to get used to this is doing half. Get out a half with Holly. If you like what's going on with the chart, keep the other half. So depending on what type of risk taker you are, you could have reverted to a flat or break even stop loss on your second lot. That protects you. That ensures the first lot is the winner. If you take more risk, hopefully the worst you're going to do on that second lot is flat or lose a little bit. You don't want to let it give back what you made on the first lot. Of course, trading is subjective, and charts mean certain things to some people and different things to other people. But this was a pretty safe one. If you would have reverted back to a stop loss of flat, boy, it would have come close, right? That's why it's a good idea to always put your stop a few pennies below the actual price, because if you get just a touch or 1 penny push through, that's going to get you out. But this one was, forming a pretty tight line here. So just depending on the way you do it, pretty good chance you could have stayed in this one and gotten some of that big percentage gain there, because 4 cents doesn't look like a lot, but it was still almost 6% in risk off mode. Just not used to seeing Holly trade these sub $1 stocks, but boy, she knocked it out of the park on this one. All right, so not a whole lot of risk on activity here outside. We got 2 cents there, we got a nickel there, same song, same dance, probably not worth splitting hairs there, but some nice risk on the short of ESPR and the long, just face ripping long of FLKS today. All right, so also something to keep in the back of your mind moving forward, and even myself, I've told myself this over and over again, but it's just something that I've recently been telling myself, and it's like when you're uncertain and you get these weird CC readings and you're just very uncertain, I think Holly 1.0 is what you should focus on. Now, did I do that today? Did I follow my own advice? No, but repetition through repetition, and especially after today, seeing how Holly 1.0 behaved in a double black diamond environment, I'm going to try to remember that moving forward. And yes, Fernando, 1.0 is Holly Grail. For some reason, we chose not to name Holly. She's just Holly 2.0, or the second one. And then we have Neo is the third one. And from what I'm told by the developers, we're going to have maybe a couple more coming down the pipeline. Now, why would we add more AI modules. I'm sure maybe some of you out there are thinking that. And that is what I alluded to. The reasoning behind that is what I alluded to earlier. As we draw closer and closer to the end of the year, preparing Brokerage Plus to come out of beta and giving people the ability to automate, well, you can imagine there's going to be a lot more activity swirling around these plays every day when people have the ability to automate them. So to ensure that everybody has fertile hunting grounds, more AI modules are coming down the pipeline. Who knows? I mean, if we took that thing live with just these three, how would that work? And that's a question we've been getting a lot as well. Of course, ITERI, I'm getting a little off topic here. We'll save that for another day as the time draws near, but there are more AI modules in development soon to be released. And when I say soon, sometime before the end of the year or right at the end of the year. Maybe a little bit after, who knows, but somewhere right around there. Okay, let me just check the time here. I've been rambling a little bit. So, okay. Thank you, Holly. Great performance. We'll see what happens tomorrow. But a couple things to point out as well. The alert window that Andy, I believe Andy is the architect of the green bar reversal, which uses some of our server list for identifying green bar reversals on the daily, spit out a couple of really good plays today. This little guy right here. And by the way, ladies and gentlemen, I can always drop this in the chat box, but you can always access it through channel 4 over here. That's where all of mine, Andy, Steve's, and Sean's favorite windows reside. So if you want green bar reversal, I will drop it in the chat, but you can also pull it from that channel. In any case, without going too much into the detail here, MJ and Wing were coming through this thing relatively soon. When I say that, they were probably coming out right off the bat. Of course, it's always good on a day like today to try to give 30 minutes, sometimes even an hour, so that some type of pattern develops. But, you know, look at what MJ did today. I mean, sure would have been unfortunate to be long this one today, right? Because it just went up straight, right? And when we look at the bar reversal that was taking place, you know, a lot of these, everything's going to look pretty much the same. They're going to be coming off these bottoms with these reversals, so they're not too scary, right? Several of these guys went. There were a couple, you know, if you would have taken them all, you probably would have had a couple of losers, but they weren't that severe. So especially in a market like this, I think this little guy is going to be very handy moving forward, giving us that little assurance that, hey, the prior day, not such a bad daily candle setup taking place. So MJ was one of the really good ones, and then we had Wing. This guy was just all over this one today as well. Once again, just one of the guys going perpetually up today. Not a lot of pain in a day like today. And of course, we got the nice, you know, area of support right here, and the prior wiki day, meaning the sellers tried to take it down, but they couldn't keep it down there. A sign of strength. Of course, Steve could mark up this chart a lot better than I could, so could Andy. But it's not that hard of a concept to wrap your head around, especially when we are in these days, right? So I'm going to go ahead and drop this one in, just in case anybody wants to capture it like this. And then we'll talk about my bread and butter windows. Let's see, for some reason my paste shows up way across the screen. There we go. All right, so that one's in there, and we got just enough time to talk about some of my bread and butter tickers. Turbo breaks up. Notice I have original in parentheses because guess what? With what we've had here lately, even though there are some things coming through, turbo up, family, no resistance, not that hard of a stretch to go, well, this thing is going to be pretty barren today. And while there were things coming through, not very many, right? So we can still play the same game, and keep in mind, just about every stock's going to be looking very similar on the daily. So what I did is, and by the way, turbo breaks up is just the original one. This is the one that was created that led to the development of the no resistance version, right? But this thing's great for finding those stocks that are hitting highs, and then you just simply size them up and see if the pattern is intact. Now, what does the pattern look like? Well, here you have it. This looks very similar to that little stock we were looking at from Holly Grail, the FLKS. Notice what it's doing here. Zit, zit, zit. Okay. This just happens to be the pattern that I prefer to look for intraday entries. All right. So first and foremost, we had GPC coming through turbo breaks up today. And we can see right here, as soon as it breaks, man, a nice clean entry. Of course, we don't want to be too chasey, but this is a relatively liquid stock, so getting it, somewhere in the first third of that candle, completely possible.
You invented a new word, chasey.
Chasey, yeah.
We don't want to be too chasey.
You don't want to get too chasey. Some days it's good to get chasey. Today was not a day to get chasey, but hey, nobody wants to buy it way up here. It just doesn't make us feel very good as traders. But in any case, nice little consolidation, marked up the risk area right here, and risk is typically looking at 5-minute candles, don't include the entry bar, but take the lowest point of the prior 15 minutes. So we got a real tiny risk area. We can see how fat and juicy the reward area is, and really just a pain-free trade from the get-go here. Now, if I was eating a sandwich or fielding a phone call and I pulled up GP, and these things repeat since new high is the alert in this window. Well, here's the juicy spot right here. If I was eating a sandwich and I didn't see it till up here, too bad, you missed it. You missed the party. This is not the good signal. It's right as it's cracking above. And the beautiful thing about the turbo breaks up is it's looking for the bigger cap stocks in this version of 4 billion and higher, and that volume's got to be pretty Richter on the smaller time frames, assuring us that there's gas in the tank to get us into the green area. So GPC was one of the ones that came out today. Let's look at the sector that GPC is in. Automotive, right? Wholesale, durable goods, we could say, right down here, durable goods. That's kind of common in tumultuous market conditions, okay? Now, next we had NGG. Hey, look, chaos over in Spyland, but hey, nice little setups occurring all over the place if we know where to look. NGC right here. Let's see, National Grid, pipeline, transportation. A lot of these stocks that are going up today might fall into what you call the defensive bucket, all right? Things that go up when markets get crazy. Sometimes it's oil and gas, sometimes it's durable goods, sometimes it's military industrial complexes, things that actually make things, not service-oriented companies. So NGC was another one. UL, another beautiful setup right here. Unilever, I think probably everybody has some Unilever products in their medicine cabinet or bathroom or whatever. They make a ton of stuff. Chemical manufacturing, cleaning compounds, soaps, right? Otherwise known as what some could call defensive type stocks. So once you get the first defensive type setup or, manufacturer, that should be a tell the next time you see one. And by the way, UL came out first, I do believe, right here. Once again, a nice pain-free trade with minimal risk and a nice fat juicy reward area. But then UN is the same thing, okay? So once you get one of these stocks, whichever one, and I'm pretty sure it was UL that came through my setup today first. If you're already familiar with it, hey, there's also UN. Well, you could have doubled up on it, right? So just keep that in mind, both Unilevers. And lastly, I think everybody will recognize this stock too. Hey, look, more, manufacturing, personal and laundry services, and, producer of all these different chemical related things, right? And once again, on a day like today, to see a lot of these nice tight setups. And actually Clorox was a little bit late, and that's why I put these two lines here, because this is the actual where the alert came through a little bit late from the breakout. But hey, once you get used to seeing these, for me, getting it right here, doable, doable because, it's not that stretched out. It's just on that barely on the top tier. And of course, everybody's different. If you're a perfectionist, well, you missed the break, but having a little bit late and then the volume kicking in, not a bad trade. And you can see it worked quite nicely. Had a nice 15, 20-minute run up to the top here, and not a bad percentage move on Clorox, even though the pattern was just a little bit late. But, if you get accustomed to seeing this, not too big of a stretch to go ahead and take that one. But everybody's a little bit different. So just wanted to point out to you guys that the simple stuff, it's there every day, just like it always is. We just have to be patient. And, I'm showing you some good ones here. Of course, there are always going to be losers, but that's why I like to mark up risk and reward, because for the most part on these plays, your risk, to reward is, a 3x or higher on some of these plays. And of course, everybody's going to be looking pretty much the same over here on the daily. But these were the guys that had the volume in them today, the big boys that were moving, that we could take low risk and capture some high alpha rewards in. And I do believe that's all I got for today, Steve. So looks like you've been doing a pretty good job keeping the questions panel up here. Is there anything that I missed or that I need to address before I turn it over to Mr. Scott here?
I don't think so.
All right. Well, Scott, if you're ready to let everybody know how they can save a little bit of dinero and walk us on out, we're ready for you.
All right, that sounds great. Let's see, what slide are we on? There's a couple items coming
Let's
up.
see here. This guy right here.
There you go. All right. Yeah, on the way out, let's remind everyone, this coming Saturday is our summit. It's been sold out for in-person attendance for a while now, but we are making it available on a live stream for free, and also you'll have access to watch the video archives as soon as they become available. To make sure that you get updates on how to view it and all the good stuff, just go to trade-ideas.com/livestream and sign up there for the email notifications. You get to see Brian Shannon, Brett Steenbarger, JC Peretz, and some others, including Dan Merkin, Kunal, I forget his last name. Our friend Jane Galena is going to be there, Airplane Jane. She spoke at a previous event. Cam Newell, who's an exciting young trader, is going to be there. Max Madaz, who is another one of our partners, an exciting young trader. He's also going to be available on the panels. So going to be a full day of great speakers, interesting panels, good stuff. So tune in. Also, Test Drive is coming up at the end of the month. If you want to go ahead and reserve your ticket, go to trade-ideas.com/test drive, and that's on, trade-ideas.com/test drive. Get in for the Halloween test drive. Those of you that are interactive brokerage clients are going to be able to try out Brokerage Plus during the 5 days of the test drive. So keep that in mind if you have been intrigued by what's going on with our Brokerage Plus integration and how we are adding auto trading coming to it next year. You can try it out with its current release version, which I believe does not have auto trading of Holly strategies quite yet, but you can try out all the interface and the hookup to your IB account and all that kind of stuff and manage some trades directly from Trade Ideas. You can just click and trade off of the signal. So go ahead and get signed up for that. It's we charge $8, almost not $8.88, just because we have to cover exchange fees and we have a lot of extra demand from our support staff during these events. So, it's a small fee, but keep that in mind. You can try out premium. And those of you that are standard members, when you sign up for the test drive during those 5 days, you will become a premium member for the 5 days. And then, of course, you'll have a good idea as to whether or not upgrading to premium is right for you. All kinds of special webinars and trading room stuff going on that week, too. There's an ebook that both Jamie and Steve contributed chapters to, and that's available at trade-ideas.com/ebook. And that's got 5 strategies to win in a post-BTFD market, which if you've been out there recently, you've been experiencing it. So get the strategies that'll keep you afloat when the market's not easy for you. We got a podcast that comes out weekly, Trade Ideas Podcast. Just search for Trade Ideas Podcast in wherever you listen to your podcast, whether that's iTunes or some podcatcher app or Overcast or whatever you use, and just add it as a subscription, and then you get the newest episodes downloaded automatically like magic to your phone on Fridays. And you can tune in and listen to what Dan and Jamie have to say about the markets and stuff in general. We have a code available for you, and that's good for the remainder of this month. And that's Save in October. Do keep in mind it's case sensitive, so you need to plug in all the caps. So SAVEINOCT, all caps, saves 15% off your first month or year of trade ideas. Those of you that are standard members and ready to upgrade right now, go ahead and use that to do your upgrade. You can apply that in the account management section. If you got a question about anything from the webinar or in general, just email info@trade-ideas.com. That goes directly into our help desk. You can also follow Jamie on Twitter @QuantBot and Steve Gomez @TodayTrader. Facebook.com/TradeIdeasPro is the URL where our Facebook page is located. If you like our page, we post some other stuff there sometimes that you can share with your friends to help kind of spread the trade ideas love, let them know how good Trade Ideas is. I think that's it. So we're going to have a recording up later on tonight or tomorrow. Thanks, Jamie and Steve, and all of you that attended.
Thanks a bunch, everybody. Have a
tomorrow.
great week. Keep it tight out there, and we'll see you on the flip side. Bye-bye.